Last week once again price failed from this range, three red candlestick, big reversal, so that was aggressive selling. So this is not normal, this is fourth time a total U-turn, because this time there was no war, no FOMO buying, but still a sharp reversal. So as long as price trading below 3430, gold is not bullish. And all the bulls, you have to wait for clear breakout. Until this level does not break out, you cannot buy. And after clear failure from resistance last week, again 3150 only support level. Before that, there is no major support. And this possible new trend line, dynamic support, fourth retest last week. This is first nearest support level in middle of the range. If price fall more, clear breakdown of this trend line, then risk retest of 3150. So you have clear static support and clear resistance, and in middle of the range a new clear trend line. This week I think very dangerous for beginner player. If you see all the big news, all of them coming in same week. Your NAP, your Trump tariff deadline, 50% copper tariff, economic indicator like GDP, PCE and manufacturing PMI, all of those things coming in same week, and your FOMC interest rate decision. Separately, it is hard to predict effect of all of those news on gold, but combined effect of all news, your Friday this week, when everything clear, tariff deadline, Fed interest rate decision, and growth indicator like GDP and NAP. Long term we can say this sideways range in gold, it will continue below 3430. And seller, before anything happened this week, they already have perfect entry. Three big red candlestick, sharp reversal, and they have perfect entry. So if Fed sound hawkish this week, for any reason, if he continue its rate pause, then it is bad for gold. Because on each retest, if you see, there is a pattern in FOMC trend. In April month, secretly he pivot on tariff. Then May FOMC meeting, he starts seeing stagflation. Then June FOMC meeting, he forecast stagflation using Iran war as excuse. Let's see what he will say this time. But he already hawkish on long stagflation trend, and before FOMC start, according to rule, Powell cannot say anything. But last week it was like mini FOMC meeting, and they said something. Trump now constantly saying he want lower rates and he want weaker dollar. Since beginning of his second term, dollar constantly falling, but recently last week he said once again he want weaker dollar. Because this move, I think when it was pumping, totally driven on dollar. When dollar weak suddenly last week, old relation, candle by candlestick, both start following inverse relationship. If strong dollar coming in future, then Friday closing you can see almost in middle of the range. And this trend line is testing. You have clear static support and resistance. For new entry, if trend line breakdown or retest, you will sell. If you see daily time frame, everything side by side, especially last year and this year, then range breakout already started last year, but still gold struggling in a sideways range. It can do range breakout to trap all the beginner, but for clear breakout and price flying outside the range. Right now there is nothing that justify that price can fly outside the range. Because if everything repeats same to same like last year, like BofA Bank said last week, gold will hit $4,000. If you read entire research note, then it's feel like it makes sense perfectly 1 year ago in this sideways range. Gold will hit $4,000. It will stay up next 12 months if Fed is forced by president to cut interest rate. Because during this time last year, market was crashing and it all began with their July FOMC meeting rate skip. But important thing for bulls, if you think range will break out, price will fly. Market bought rate cut first, emergency 75 basis point. Then market goes up. After that, they did big size 50. So market bought first, news came later. But right now nothing is happening. No news leak like last year Wall Street Journal in September month. Market is not buying rate cut like last year and no range breakout. So based on side by side compare last year 2024 and this year and all the information, especially Powell big pivot on stagflation. On each FOMC meeting, he become more aggressive on stagflation. Very hard to believe gold will fly outside this range. So from this last year bottom, first impulsive wave subdivided into lower degree 5 impulsive wave, counter trend correction wave 2, third impulsive wave again subdivided into 5 impulsive wave when Trump applied tariff, fourth wave correction when Trump pivot. Right now we are in final fifth wave. After that, long sideways correction. After final fifth wave, Trump finally pivot on tariff. They are stopped. And since then, if you see, inflation expectations are falling. Fed constantly changing his tone aggressively on stagflation. Tariff uncertainty, they are decreasing day by day. And gold is sideways since April month, since final fifth wave. Fed cut or not this week, especially a 50% copper tariff that will happen after FOMC meeting. NAP, which will come after FOMC meeting. Fed will stay hawkish on stagflation. Because of that, high chance price continue its sideways range below 3430 and lower part of the range 3150 downside risk and new trend line above 3300. This is your new dynamic support level. So this is latest support level. If it break down, then technically it will be more bearish. Weekly time frame, you can see big sharp reversal and two red candlestick on weekly time frame. But shocking thing, COT bought gold last week aggressively. You can see in chart there is a big spike. There was big vertical dump last week from upper part of the range, but still COT bought gold aggressively. Maybe they are ready for range breakout, but entire market expecting repeat of 2024. Sideways correction, then range breakout. Monthly time frame, watch carefully. This week you will get monthly closing. August will start, but before new month start, I think we will have crystal clear answer on everything. Fed FOMC, when they will cut interest rate, Trump 50% copper tariff, and tariff are inflationary or not. If market close once again near 32.79, one more sideways monthly closing, then it is technically bad sign for gold. More evidence, gold is doing long sideways correction. But something shocking happen. Depend on 50% copper tariff that will ultimately decide Fed interest rate decision. Upside and downside risk still same, 3500 and 3150. This intraday wave counting I share in Telegram. Finally price took U-turn from 38% projection, exactly testing this area, then big sharp reversal. Now price breaking this support line. So if price spike because so many big news this week, then 3380 will be first upside resistance. But on this area you can sell and downside risk ultimately 3150. But as long as price trading below 3430, especially 3380, gold is bearish. And more price goes down, do not worry, you have all of them clear static support level. So I don't believe price will fly outside this range very easily. Trump want lower rate cut, Trump want weaker dollar, and Trump pivot, he is not firing Powell. Since then, gold instantly collapsed. Despite constantly Trump calling for rate cut, if they skip rate cut this week, rate pause continue in July FOMC meeting. I think compared to last year, that will be big shocking change for gold, and I think very good for dollar.